afternoon, traders all around the world. This is FXPassion broadcasting you live on YouTube, and this is Forex Trading Course 101. Happy Friday. Hello Akos, how are you? Hello Christian. If this is your first time, everybody, we are in the beginner module. So if you don't understand what is happening and why, please go back to the Stohastic YouTube webinar page and start to watch the lessons from the basic module, market structure, highs and lows and trends, and of course start with lesson number 1. Hola Silas, como você está hoje? Hello Miguel. And remember what we're trying to do, we're trying to build the 3 pillars, we're trying to build a strategy and or a system that is easy to understand, right? Risk management rules, we're trying to understand how risk management works, and the big one, the psychology part. Without the psychology part, our strategy and our risk management is not going to work, everybody. Hello Romar, tudo bem né você? Tudo ótimo, obrigado. Wow, Akos speaks Portuguese, man. Bom dia, Akos, to you. Remember everybody, 90% of traders lose money in the Forex market worldwide, and the webinars are not trading or investment advice. The webinars are for educational purposes only, and for questions or homeworks, you have my Gmail contact, my Skype contact, and or my LinkedIn contact. Now, what do champion traders say? And this is a psychology thing. Say it with me, everybody. I am not going to live and die on a trade by trade basis. Oh, Passion, but I don't understand this quote. Just give it the time, you are going to understand this quote. Okay, just say to yourself this every day. And one day something is going to click in your head and you're going to say, oh man, now I understand, you know. And of course this is a quote from Mark Douglas, which is a trading psychology coach. Okay. Now lesson for today, support resistance in sideways channel in market structure. Everybody, let's see how serious you are in becoming a consistent trader, consistent profitable trader. Did you do the homework? Or are you doing the homework from yesterday? Hello VA sir, how are you? Hello Santano. Let's see everybody how serious you are about, oh, I want to be a professional trader, I want to be a millionaire trader, I want to make money in the Forex market. Let's see how serious you are. Are you just blah 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 and just lip service, you know? Everybody wants to be everything, you know, but the question is, are you doing the homework? Did you do the homework? You don't need to answer me on the chat. It's a rhetoric question, everybody. Okay. Now let's go back and let's try to learn something today. Okay, so today this is the last webinar that we are going to talk about the sideways channel, everybody. So if you have questions, today is the day. Type in the chat. Okay. So in the first webinar, when we were talking about support and resistance, we learned about how to confirm support and resistance and how to confirm the sideways channel and how and when we are going to enter, and we learned about the stop loss and we learned about the take profit. Hello Annie, how are you? In the next webinar, we learned that the sideways channel is always a part of something, and sooner or later is going to end, and we learned about emotional resilience, right? Yesterday we learned why and how if we don't see the big picture, we learn how, why, and how we lose. Okay, so today this is the last webinar about the sideways channel, everybody. So if you have any kind of, we are not going to go back. Namaste Patak, how are you? If you have question today, today is the day. Okay, so this is the market structure. Okay, let's delete. Okay, this is the market structure: extension, retracement, extension. Okay, this is the market structure and the market wave. This is the uptrend line. Hello Vincent, how are you? It looks like the pairs with consolidation is increasing. Miguel, yes sir, absolutely correct. Yes sir, are increasing because the participants in the market, you know, they are not sure about a lot of things. Especially the investment banks are not sure anymore about the central bank policies all around the world. And you can see how this reflects, how mass psychology reflects the sideways channel. So the answer is yes. I mean, this is my opinion, of course. So this is the market structure, everybody. And after the extension, we learned that comes the retracement, right? Okay, now I'm going to show you where we lose, everybody. Lack of confidence. Well, I would use a different word, Miguel. I would use the word lack of direction. Lack of direction. You know, I mean, the unemployment rate for the US dollar is bigger and bigger and bigger, and the coronavirus is hitting hard the USA, but the US dollar is still strong, you know. So, and you can change this to most currency pairs. You can take the euros, it's more or less the same, you know. The GBP maybe does have some direction, but it's moving also sideways, you know. I would say not lack of confidence, but, and again, this is my opinion, maybe lack of direction, you know. Okay, everybody, so we learned about this, right? Now, how would you trade, and the lesson is support and resistance in sideways channel in market structure, right? How would you trade, everybody, if the market is like this? And this is structure, okay? This is structure. How would you trade if you see this? And we are going to talk about AUD CAD today as an example. AUD CAD monthly chart. How are you going to trade this? And remember, again, we are talking about the probabilities. When and where, I mean, what kind of trade is going to have a higher chance of success? The short trade or the long trade? What do you think? This is the last lesson today about the sideways movement, everybody. We learned the rules, we learned the concepts, we showed you how it's moving. Romer says long. I've heard market is a leading indicator of economy. Is this true, sir? Santano, I don't understand your question, my friend. What do you mean the market is a leading indicator of an economy? Sila says long. Okay. Are you sure that it's long? what everybody, okay, this is the lesson today. What technical indicator is telling you that the long trade has more probability of success? And pay attention here, I'm not saying that you are wrong, but I'm asking you, you're my teacher, okay? And this is not the short-term trend, okay? And this is not the smaller time frame, this is the monthly time frame, and this is maybe the weekly time frame, and the market is making equal lows, equal highs. And everybody that is saying, oh, long has a greater chance, well, what technical indicator or tool is telling you that the long trade has more probability of success than the short trade? Long, okay. Double top, yes sir, also double bottom. We are in an uptrend, says Miguel, therefore long, okay, great answer. Need to see the bigger picture. This is the bigger picture, Santano. This is the biggest picture that you are going to get. This is structure. This is support and resistance in structure. The bias is up, yes sir. Structure and trend line, yes sir. Hello Selbakti, how are you? KJ, yes sir. We're above the long-term trend line, yes sir. Okay everybody, so let's learn something. What is the indicator or indication that we are ready to go long, in this example, to go long in market structure? In other words, what is the indicator that is going to show us that the retracement is over? Everybody, because this is extension, this is the last extension, like this and like this and like this. This is extension and this is retracement, okay? After the retracement come extension, yes sir, but what indicator is showing you, everybody, that the retracement is over? Zuelio says, well, maybe the retracement is not over. Salbakti says, if that is structure in uptrend and it's consolidating, probably is best for going long. So, okay, but why? Why do you think the long trade is going to have more chance than the short trade? VA says, until the second law of structure hold, market can do anything. Yes sir, structure is up as long as the long bias. Short-term trend, we don't know. End of retracement, start of new extension, no more higher lows, structure higher highs. Everybody, what is the problem? The problem is, this is AUD CAD monthly chart and we were sideways here. We were, and we're going to go back next on the other slide. We were sideways here, okay? And extension, retracement, extension, okay? is just in reverse. This is an uptrend, up extension. In AUD it was a down extension with a downtrend, and we can draw a downtrend line. It's the same concept, just in reverse. Be patient, everybody. I'm going to explain you everything. Be patient. Okay. Now, what is the problem? The problem is, everybody, if you say, well, long, and I'm not saying that you are wrong. What is the problem? If you think that, this is just a reverse example, if you think that the short rate has the higher chance, where is the challenge? The challenge is, man, if the short rate has a higher chance, if you think like this, and I'm not saying that you are wrong, but if you think that the short rate has a higher chance, would you stay out of the market for, let's count the candles, we are on the monthly chart. Would you stay out for 1, 2, 3, 4, okay, double display show. Let's count the candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Everybody, if you see structure like this and you say, well, the higher, and again, I'm not saying that you are wrong, but if you think that only the long trade has a higher chance of success, then my question is, are you going to stay out for a year until the market touches the lower band again? And the answer is no. So how are you going to trade this? Miguel says we need to see a counter, trend line break, and the candlestick formation. Yes, everybody, all of you are right. So what is the indicator or the indication that we are ready to go long in the market structure? In other words, what is the indicator that is going to show us that the retracement is over? Well, we learned this, right? Is the change in the short-term trend. I need to correct this one. Give me a second. So red, let's make it red, and like this, and like this. Okay, so the short-term trend, you know, the market's making higher highs, higher lows, higher highs, higher lows. It reversed, start to make lower lows, lower highs, lower lows, lower highs, and it reversed again, start to make higher highs, higher lows, you know. And we were trading this extension on the 1 hour, 2 hour chart, and up in here we start to lose. We didn't do anything wrong, everybody, but up in here we start to lose because we are buying the extension, and we are going to lose most likely 2 or 3 times before we spatially see that the market reversed again and the market was making lower lows, lower highs. And we are here right now. Okay, or maybe we are, maybe the short-term trend didn't change already. So I'm going to ask you again, what do you think? There is no right or wrong. What do you think? What trade is going to have a greater chance of success? And if you say long because the uptrend line and the structure is up, then I'm going to say okay, but when the market is going to hit the upper band on the monthly chart, as you can see from AUD, are you going to stay out of this currency pair for a year? Thank you, Patak. VA says no sir, trade what you see, change short-term trend. VA, you are my teacher, okay? and let's play around a little bit. Everybody help VA. VA is the teacher, I'm his student, and VA is telling me, well, go short up in here, and I'm going to ask teacher VA, but we are in an up structure and we have an uptrend line. Aren't we risking this short trade? I mean, isn't this trade risky? What is going to be your answer? Everybody help VA out. All of you are thinking most likely the same. VA is telling me, oh, let's go long in here. I'm going to say, teacher VA, but we are going against structure and we are going against the long-term downtrend line. Isn't this risky? Everybody, you need to understand this and you need to defend yourself, because some of you are teaching other students, and if you say to your students you can go short or long, no problem, and the student is telling you, or a junior trader is telling you, oh, but you told us that this is risky, you told us that we should go with the uptrend, and you told us that we should go with the uptrend line, and you told us that the probability, if we count 1 plus 1 plus 1, you told us that the probability is up. So isn't the short trade risky? Then he says it's a sideways market in an uptrend structure. Yes, sir. Teacher Dennis, you are absolutely right, but again, you and VA are my teacher and I'm still asking you, okay, I accept that we are sideways in an uptrend structure, but still, isn't shorting the market a risky trade? Everybody? What do you think? Happy Friday, you know. Passion I don't like. There is a comment on the other streaming platform. Passion I don't like Fridays webinars, you know. I'm giving the difficult webinars on Friday, everybody, for you to think during Saturday and Sunday. Okay. Now let's make a real example from the market. How would you trade if the market starts to make higher highs, higher lows again, higher highs, higher lows, but in the middle start to make lower lows, lower highs? And this red could be the 1 hour, 2 hour, 4 hour, sometimes daily chart. Are you going to go short? Are you going to go long? Are you going to stay out? If you think that the market is going to go long, well, you still have time, you know, the lower band, the upper band, we are here right now. Definitely yes, so risky, it depends on risk reward, yes sir. Long if market makes higher highs and higher lows, short if the market close the lower channel band. VA says stay out. Now everybody, if you don't understand this, I would suggest you, as VA is saying, well, stay out. Because if you are going to open a trade and close a trade and open a trade again and close a trade again, you know, my trading time frame will decide the actual bias. Okay everybody, so remember, this is the last time that we are talking about the sideways channel. Don't mix bias with timing. Okay, everybody, don't mix. If you are going to go long in the middle of the range because you don't see what is happening, or if you are going to go long up in here, because this is where we are going to lose for sure. Me too. Okay, because why is that? Because we don't have a crystal ball. the market was making a nice extension, retracement, extension, retracement, and then the market changed the short-term trend, and we were buying, right, on the 1 hour, 2 hour, 4 hour chart, right? And then up in here, at least if it's not a pivot point or support or resistance, that we are out and that we have a technical reason that the market could fall. Okay, so we don't have anything here. I'm going to continue to buy, and the next trade is going to be a loser for sure, and that's okay because we don't have the crystal ball, right? Okay, but when the market, now I'm looking at the red line, when the market is going to make lower lows, lower highs, then I'm going to wait, right? I'm going to wait, and I'm going to wait what? The market was making higher highs, higher lows, the market starts making lower lows, lower highs. I'm going to wait for the next counter trendline break in order to go long, right? But this counter trendline break most likely is not going to happen because we have a sideways channel in structure, right? So maybe I'm going to wait for, you know, for the 2, 3, 5 swings, and then the picture is going to be clear to me. I'm going to perceive the market, oh, this market is going down, right? And still, my strategy is going to be this. I'm going to wait for the counter trendline break, but this counter trendline break is never going to happen until the market is going to touch the lower band. Okay? Now, can you short the market? Of course you can short the market on this smaller time frame, you know. Romar says, I think if we manage our short trade carefully, we probably won't lose even if we won't make money. Romar, the trading is easy when you see the whole picture. The question is, when this happens the first time, you are not going to see the whole picture. You know, you are going to see what? This is AUD-CAD, everybody, the monthly chart. You know, you are going to see this counter trendline break in here, and you are going to short the market. You are not going to see the sideways channel. You are going to think, well, extension, retracement, extension, retracement, you know, this is the next retracement, right? This is the next retracement, and you are going to perceive this price movement a normal part of the extension. I mean, the market was moving down, 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 and now it's moving up, but still the market made a lower high. So we have a confirmation that the market is falling. Agreed, everybody? Do we agree that in some point in time this was the market and this was extension, retracement, extension, retracement, extension, right? And after the circle the market was falling down, and okay, it moved up but still made a lower high, and because it made a lower high, what is our brain going to think? Most likely our brain is going to think, well, yes, we have a double bottom, right? But it closed a lower high, so the extension is still happening. Agreed? I mean, I would think this way, and I would short the market in here, and of course, if you manage the trade, you can make some profit, but if this would be the daily chart, everybody, or the 1 hour, 2 hour, 4 hour chart with its structure, we would lose, right? And then we would enter short, right? Why short? Because we have a down structure, we have a down trend line, you know, and we would lose again. Or maybe not, you know, if we learn where to put the stop loss, right? That is still in down, yes. What I'm trying to tell you today, everybody, is that sometimes we don't see the structure, I mean the sideways channel, and sometimes we think that because we don't see, we think that the long trade is the best option because we don't see this. It's easy for me to give you a class here in theory, everybody, because I can draw everything I want. But when the market is moving and I don't see the future, then I'm going to think based on what I see. Makes sense, right? Makes sense. And I'm going to short the market and I'm going to think, well, this double bottom is not a problem because we are in a down structure. And this is where I'm trying to tell you, don't confuse bias with timing. And we learned what is timing yesterday. So even though my bias is right, I can still lose on the big sideways movements, everybody. And this is a problem. And this is a problem. It's normal, okay? It's a process how to spatially see everything. But this is a problem. We are going to lose on the 1 hour, 2 hour time frame 1 to 3 times, and we are going to think that this currency pair is impossible to trade. Well, in reality it's not impossible, it's just in a sideways channel. Okay, so don't confuse bias with timing. Ace is asking, so we use highs to find support in an uptrend? Yes, sir. Patak says yes. Eddington, is there a way I can contact after the webinars? Eddington, are you here? Are you in the webinars, Eddington? I think he's not here. But he's going to be back maybe on Monday, Tuesday, Ace, so don't worry. Okay, everybody, so what is the indicator that is going to... What is the indicator or indication that we are ready to go long in the market structure? In other words, what is the indicator that is going to show us the retracement is over? Answer is the easy answer, is the change in the short-term trend. We learned this, right? Okay. Patak says no. Okay, what is a no? What is a no? So everybody, what is the solution? What do you think? How are we going to trade this in a way that makes sense to us and that is going to give us the higher chance of success? What is the answer? What do you think? What is the answer of trading this? What do you think, everybody? What is the answer? How can we trade this in order not to lose too much, in order to see the whole picture? Basically, this lesson today is in reverse of yesterday, everybody. If you understand the lesson from yesterday, you can find the answer. How are we going to trade this? Oh, Eddington is not online. Okay, thank you. Not available. Okay. Trading the lower time frame. Yes, sir. What lower time frame? What lower time frame? What if we trade at the lower time frame is the answer, everybody. What lower time frame? The daily, the 1 hour, the 2 hour? Which one? If this is monthly or weekly, the green one, if this is the monthly or weekly, what time frame are we going to trade? Daily, says Vincent. Yes, sir, maybe. Okay, great. I explained, I said that we must wait for a candlestick formation on the lower time frame. Yes, sir. But we are not talking about entries right now. We are talking about the direction. Christian. 1 hour, 2 hour. Okay, great. Okay, one last thing before we go on AUDCAD and do the trading exercise. How are you now? We get to the lower time frame. Yes, sir. CSF candlestick formation, Miguel, I think. How are you going to trade the lower time frame if the lower time frame is going to make a sideways channel? And this happens time to time. How are you going to trade this, everybody? Okay, so you need to be aware. How are you going to trade the smaller time frame if we have a sideways channel like this, or if we have a sideways channel in the middle on the smaller time frame? On the smaller time frame, or we have a sideways channel up in here in the upper band. How are you going to trade this? And here is where we lose money, everybody, because this becomes the problem. I'm going to delete the yellow, delete this one, and delete this one. Small picture time frame, candlestick formation, long, yes sir. Santano says in lower time frame like hourly we can see the clear structure, maybe yes. Romer says long if price is coming from the lower band, short if price coming from the upper band. Great. Daily long to example in the middle stay out. Okay, Annie, great. Okay. What you need to understand, everybody, is that this is the lesson. Listen to me very carefully. This is the lesson. Before entering the trade, and again, if you don't understand, if you don't like the sideways channel, just stay out. Before entering the trade, you must decide what consolidation are you trading, because we are going to have a different strategy if we are trading the big structure consolidation, or if we are going to trade the small consolidation. This is a concept, everybody. In the beginning it's difficult to understand, okay? Because many of us, we are still going to lose money because we are going to mix apples with bananas. Okay? You need to decide, everybody, if you are, now, we are talking about structure and the sideways movement in structure. And still I have the problem with the mouse. Okay, we decided that we have structure, that we have the sideways movement inside structure. And then what is the reason and what is the answer? We said, well, we are going to trade on the smaller time frame. Now, what you need to be very careful and what you need to pay attention, you need to be very aware before entering the trade. You must decide what kind of consolidation are you going to trade. Because it's not the same if you enter down in here and you are trading the red one, or if you enter down in here and you are trading the green one. Do you understand this, everybody? And does this make sense to you? Pay attention, because those two price movement and those two consolidations are different in size, are different in entries, are different as a stop loss and a take profit. Also up in here. Those are two different trades with different strategies to enter. They are different in size, different with the stop loss, and different with the take profit. So, because we are going to have a different strategy if we are trading the big structure consolidation or if we are going to trade the small consolidation. Okay? So, before you enter a trade, be very careful and be clear with yourself. Oh, I'm going to enter the daily time frame, the daily structure. Okay. Another lower time frame says Dennis, Patak says go long from bottom, probability high. Everybody, what is the difference? The difference is that if you are going to enter and trading the green line, your entry, your counter trend line with the bullish candlestick formation and everything is going to be here. If you are going to trade the red line, your entry is going to be here. And those trades are going to be different in size, in volume, in stop loss, you know. Patak says, I avoid small sideways. Great answer, Patak. Great answer. Now, everybody, let's make a poll. Who in here wants to trade the red line? And then we're going to tag the AUD cat. Who in here wants to trade the red line? There is no right or wrong. Let's make a poll. Who in here wants to trade the red line? The smaller consolidation, yes, the smaller consolidation. Sometimes we don't have other chance, because we learn this, everybody. If this end of the retracement is over, the train has left the station. The entry was here, you know, but we were away from our trading station, we were walking with our dog, or we were simply sleeping, and we wake up the next day and the market is here. So you cannot enter anymore at the green one. You need to trade, or you can trade, right? Or if you want to trade, you must go with the red one. And he says, I do. Zuelio says yes. Romar says me. Ako says no. Santano says me. Okay. Question. Where is the stop loss going to go? VA says I do. Santano says me. Okay. Where should the stop loss go, everybody? Passion, is this a tricky question? Absolutely. Absolutely, this is a tricky question. If you are going to enter here, where should the stop loss go? Below the red line's lower band. I go long after breakout if small size. Okay, where should the stop loss go? Romer says below the red line's lower band. Okay, so this is Romer. This is Romer here. His stop loss is here. Yellow. Where should the stop loss go? If you're going to trade the red line trade, where should the stop loss go? And it says 10 till 15 pips below the small bottom line, okay? 10 pips on the top of the high of the small channel, below the lowest low of the red structure, below the blue line. Oops! Patak and Akos below the blue line. Why is that? The majority is saying below the red line, but Patak and Akos are saying below the blue line. Why is that? Why would you put your stop loss below the blue line? And if you put your stop loss below the blue line and there is no right or wrong, let's make this in what color? Blue, okay. Blue stop loss. Where is going to go? Where are you going to profit take? After breakout, Patak says after breakout below black line, okay? Based of risk reward, below the lowest green red low. Says Miguel. What do you think, everybody? Where should the stop loss go? Oh, we all entered the red line here. The violet counter trend line break. We all entered here. Where should the stop loss go? Should the stop loss be the yellow line or should the stop loss be the blue line? And there is no right or wrong. Right? Look in here, everyone. This is Euro dollar daily chart. Euro dollar daily chart, everybody. And this is the sideways movement, right? Sideways movement, clone, sideways movement again, somewhere in here. And Euro dollar. Okay, not the best one. Sideways channel in Euro dollar daily chart and transparency. Okay, and we are going to jump from the daily to the 1 hour chart. And on the 1 hour chart, we have this. This is the upper band of the smaller consolidation inside the structure clone, right? See the difference, everybody? This is the 1 hour consolidation and the daily is the pink. Akko says yellow, 10 pips below the higher low of the smaller channel. Says Christian. Patak says target size, sideways size after breakout, stop loss, black line. Everybody. What about the concept that the higher time frame controls the smaller time frame? What about the concept that the higher time frame controls the smaller time frame? Patak, I hear you, my friend. Salbakti says that is true, yellow line. Okay, everybody. For the trader who chose the yellow line, if the market is going to stop you out on the yellow line, what are you going to do when the market makes two higher highs and two higher lows? Everybody, what are you going to do? Talking about safety, okay? I would say that the safest, not that the yellow line is wrong, okay? Yellow line is okay, but talking about safety, I would put my stop loss below or above the green, because the higher time frame controls the smaller time frame. Okay? And no, yellow is not wrong. Both stop loss are okay. But talking about safety, because the red line is going to move according to the green line, you know, and some of you are saying, well, I don't trade small consolidation. This is why. Small consolidations are very volatile, and sometimes the market is going to stop you out and reverse again. So what are you going to do? Santano says smaller time frame after sometimes converts with higher time frame. Yes. Blue line is better to stay in the trade. Yes. Not that the yellow is wrong, everybody. KJ, correct. So for the traders who are going to trade with the yellow line, just remember, if the market is going to stop you out, and sometimes is going to stop you out, okay, and reverse again, you enter again. Enter the position again. And do a favor to yourself, everybody. With the second trade, don't put the stop loss again at the yellow line. Put the stop loss at the blue line. Okay? And if you enter again and you put your stop loss at the blue line and the market falls and stop you out, question, did you do anything wrong? Did you do anything wrong? Did you do anything wrong? Romar says, but if the blue line is the stop loss, can you take profit the upper band of the small consolidation? Romar, you know the answer is absolutely not. It's not. Santano, if I put stop loss at the blue line, how to manage and take profit? Santano, the answer is normally. Aqua says, no. That's it, everybody. If you enter here and you put at the blue line, what's the difference? No, we didn't do anything wrong. We learned this yesterday. Consolidation, sooner or later. Yeah, I'm sorry, we didn't do the exercise. We're going to do it on Monday, okay? The consolidation, the big one, sooner or later is going to end, right? Is going to end like in here, just an example. Okay, so the answer is no, we didn't do anything wrong. But the difference between the trader who is going to put the stop loss at the blue and the trader who is going to put the stop loss at the yellow, the trader with the stop loss with the blue is going to have one losing trade, and the trader who is going to put the stop loss at the yellow is going to have two losing trades. Either way, not a problem. Now, to be fair, right, the trader that has a stop loss on the yellow, he's going to have a higher or sooner profit, because the trader who is going to put the stop loss at the blue, right, If this is 1, then we need to earn minimum 2. So the trader who is going to enter with the red line counter trend line break and is going to put the stop loss with the blue line, you need to take profit up in here. The market can do what it wants. Yes sir, absolutely. Okay, now what is the lesson? The lesson is, and you're going to understand this with the Fibonacci's, we can enter on the smaller time frame, but we can manage, and we are talking about the stop loss and take profit, the trade from the higher time frame. Okay, this lesson is an upgrade. Okay, and no, we don't risk more. Everybody, some of you are still not understand that you can have a wider stop and the same risk. No, we don't risk more, we risk exactly the same. If you don't understand how it's possible to risk the same amount of money with the yellow line and the blue line, your stop loss with the yellow line could be 1%, and your stop loss with the blue line can also be 1%. We are not risking more in money, we are risking the same amount. Okay? Okay everybody, enough for today. Happy Friday. Until see you back on Monday. Until Monday, stay strong and relax with passion. This is FXPassion signing off.